right, so here we are. We are at the beginning of section 5, and section 5 is budgeting. Ooh, did you just make a funny face? We see it all the time. Budgeting and money are the two parts that so many of our directors have a hard time really getting excited about. But hopefully you'll understand the importance of budgeting and understanding why it is so key to your program. Now I'm going to do a section that I kind of call butts in the seat. How many students is your program licensed for? Write that number down on a piece of paper. Oh wait, go get a piece of paper. All right, so your program is licensed for 70 people. How many times have you done your budget and you've done your budget based on 70 kids? Is that a realistic number? Are you always going to be full? We always try to encourage folks to budget at 80% of their program. So when you're developing your budget, make sure that you do it at 80%. Now you have a series of budget worksheets, and there are lots of them, and we realize that. And they're there to they're designed to help you work through the process, and to help you remember the different parts that you're going to have to pay for as a director or as a program. Now, if you work in a really big setting like a school district or a church, and you're never going to see the money, we need you to still do this section, because we want you as the director to understand the importance of a budget, and we want you to be able to communicate with your school district, with your church. Maybe you're just in a large program. We want you to be able to communicate with them, and we want you to understand why really that one teeny weeny circle out of a piece of construction paper, it's not worth throwing away or recycling. There's still a lot of paper left. Use it. This is being a good steward of the money. So we're going to talk about budgeting and understanding the importance of that. So you're going to hear me talk about potential slot income or butts in the seats. And we just want you to know that even if you're in a big program, it's still going to apply to you. If you're the director and not the owner, it still applies to you. Okay, so we've gotten our paper, we've gotten our piece of paper and a pencil. We're going to talk about potential slot income. A couple of things that we're going to talk about is we're going to look at what is the break-even point in your classroom. I don't care which classroom you take, pick one. Write down at the top of the paper, whether this is your toddler classroom, if this is your 3-year-old's classroom, is this your pre-K classroom, or is this your infant classroom? Okay. So, a couple of things you need to keep in mind with your potential slot income is A, how much space do you have in that room? What is the maximum group size for that age? And what's the overhead for that space, for that classroom? Overhead? Yeah. How much does the teacher cost a month? How much do you cost that room a month? How about the rent and the utilities? If you don't know, here's a real quick, simple solution. Over on a different part of your piece of paper, I want you to write down what is your monthly rent, your monthly utilities, and how much do you as the director, and maybe you have an assistant director, make. What are your supplies, and any other miscellaneous expenses that really are part of the whole program's expenses. Add all those together, and for fictitious numbers today, we're going to say that number is $2,000. So $2,000 a month, maybe we should go with $3,000. $3,000 a month is your rent, your utilities, your cost as the director, all of that for the entire program. Now most programs, that's still pretty low, because I'm sure as a director, you're not making about $400 or $500 a month. So as a director and part of the program, it's your director's fees, it's your facility rent, it's your utilities, pest control management, and your supplies, and maybe even food. All of that needs to be worked into your overhead part of the budget. So the overhead part of the budget is then divided by the number of classes that you have. If you have 5 classes, and we were talking that our number was 3,000, then right there we know that we have $600 per month in overhead for that classroom. Okay, so we're going to talk a little bit today, and we're going to use an infant classroom as an example. Your infant classroom is going to either have 2 staff with 9 kids or 1 staff with 4, because remember the maximum group size. Now, so today we're going to say that your infant classroom has 1 staff and 4 babies. Okay, so here we've got 4 babies, and on our paper, I want you to write down that for those babies, we're going to charge $700 a month. So $700 a month times 4 babies is going to be $2,800. That's how much income comes into that classroom. Now, we have an expense, right? We automatically have an overhead expense, and the overhead expense we said was $600, but we know that's pretty low. So we're going to say $600. That leaves us with $2,200. So that $2,200, how much are you paying your staff person? Okay, haven't thought about that yet. But let's just say on the average, your program is open just 40 hours a week. Now I understand most programs are not. Most programs are open closer to 60. You want to go with 60? That'll be fine. We'll go with 60. So we have 60 hours a week for 4 months, for 4 weeks. So 60 hours a week for 4 weeks. How much do you pay that infant teacher? Well, for my easy math, we're going to go for $10. Now, if you're watching this and you're an infant teacher, don't think you should be paid $10. A lot of that depends on if you have your CDA, the length of experience, and what's your market, okay? What's your experience, what's your education, and what does the market pay? So, we're going to pay our infant teacher $10. And sometimes you need 2 teachers because you got 60 hours. So anyway, our infant staff are going to be paid an average of $10 an hour. $10 an hour times 60, it's going to be $600. $600 times 4 is $2,400. We have $2,400 in staff expense. We have $600 in overhead. So right there we're at $3,000. And how many babies did I tell you we had? We had 4 at $700. So even if our infant room is full, our program is losing $200 a month in that classroom. Whoa. So breaking that down and doing something like that with every one of your classrooms starts to give you an idea. We can look at it a different way. And let's do this with perhaps our 4-year-olds. So you have a 4-year-old classroom, and in your 4-year-old classroom you have 12 kids. You have 1 teacher. We've already discussed the overhead is $600. So we have $600 in overhead, and we have a teacher. And we're going to say that our teacher in that classroom makes an average of $8 an hour. So $8 an hour times how many hours? 60. So 8 times 60 is going to be $540 a week. So $540 a week times 4 is going to take you over $2,000. I didn't write that out ahead of time. It's going to take you over $2,000. So between your staff and your overhead, that room is going to be a minimum of $3,000. So for that room to break even, you need $3,000 a month worth of income. What do you charge for that class? We're going to say you charge $500 a month. So just to get to our $3,000 a month in expenses, we are going to have to do what? You have to have how many people in the seat? You're right, that's how many we need. We need to have at least 6 students to break even. Okay, so once you have your 6 students and you're breaking even, then you can start to figure out how many more to add. Now, if your staff person's okay with going up to 12 or 13 students by themselves and you don't need a second staff person, boy, that's pretty cool. You can start to do the numbers, right? You can start to do the math for every one of those kids. That rest is, you might call it profit. I wouldn't, because you already have learned that your infant room isn't really covering its expenses. So, but at 6 students, you have enough butts in the seats to pay your staff. However, if your space can allow you to go to 20 kids, you're going to need a second staff person at some point in time. When do you want to bring that staff person in? We're going to talk about this in marketing as far as when are the best times for enrollment, but that also goes into your budgeting, and it also goes into when you hire. So understanding the potential slot income in your classroom, understanding the break-even point. The potential slot income, real quick, is if you have 10 kids in a classroom and they're all paying full price. That's your potential slot income. 10 kids paying $600 a month, your potential slot income is $6,000. But do you have a discount for employees' kids? Do you have a discount for siblings? Do you take federally sponsored kids? Do you have kids through another program that may not pay the full rate? When you start to take all those deductions out, you need to remember that most likely that classroom is no longer going to be at its maximum of $7,000 or $7,000 potential slot income. We hope that you'll take some time, and I'm going to have you pause this video, and I want you to work on at least one classroom and figure out your overhead. Figure out your overhead, figure out your break-even point, and you're going to see some steps kind of done in a PowerPoint presentation on this video next. A lot of the same content, but this way you get a chance to see it visually.
I want to spend just a minute talking to you about some of our money reports, some of our financial reports that you may use with your program. Budgeting is one of those, and it is a predictor. You use the budget to look at a period of time, usually a month or a year, and say how much you expect to have come into your program and go out of your program over that time frame. There's also something called your profit and loss statement. This is, again, looking at a period of time. It's very similar to the budget in that way. They're almost siblings. The profit and loss statement looks at how much revenue came in, how much money went out, and what is the balance of those two things. So your profit and loss statement tells you, or sometimes it's a retained earnings report. This is your annual, not snapshot, it's a report of where the money went over the course of the year. And it does take into account things like taxes, which some of our other reports don't, as well as outstanding bills and outstanding revenue. This is something that the program will use to prepare their annual federal taxes, whether that's for an owner or for a corporation. And then those pieces of information, if it's a corporation, will go on to K-1s. Unless, of course, it is a nonprofit, in which case it'll go on to some different forms. And anything that would be in a normal company considered profit is considered retained earnings in a nonprofit. Nonprofits can keep money from year to year. Being a nonprofit doesn't mean there is no money left at the end of the year. It means that you do not get to distribute any money left at the end of the year to your shareholders, because you don't have any shareholders. You are a nonprofit. And any amounts that are kept at the end of the year need to be commensurate with the program. So if you had $1 million left over at the end of the year, that would not be considered commensurate in childcare, and you would need to distribute some of those proceeds. We have another type of financial report, which is called your cash flow statement. All a cash flow statement is it's like looking at your bank statement. How much money do you have right now? It can give you some information about up to today, how much money in this month or in this period have you spent on payroll or on equipment, food, whatever. How much money as of today have you gotten in revenue? But it makes absolutely no account of things that are going to happen, such as payroll taxes or people who are going to be paying tuition late, anything that would happen in the future. So it is not the world's most effective. Please stop going up and down the stairs. I told you I'm recording. Please go somewhere and stay there. A cash flow statement simply says what is happening right this minute. A cash flow statement is nothing more than a snapshot of where the money has gone through today. It doesn't take into account things that are going to need to be paid in the future or revenues that are due to you that you have not yet earned, that you have not yet received. This is a type of cash flow management that. Okay, guys, go downstairs and stay downstairs. Well, you keep coming in and out.
No, I don't.
Honey, the door's opened and closed twice while I'm recording this one section.
No, it hasn't.
Yeah, I hear the noise. Ah! So a cash flow statement simply says where the money has gone or where the money has come from. It gives us no indications of what's going to happen in the future. An awful lot of businesses use cash flow management, and it's not very effective because just because you have $5,000 in your checking account doesn't mean you can spend $5,000. Probably an awful lot of that is due to the federal government in the form of payroll taxes. Every single dollar that's withheld from one of your employees' paychecks for Medicaid or Social Security, you as the employer have to match, and you have to send that money to the IRS by the date it is due. If you don't, they can seize all of your assets. And they don't have to give you a whole lot of notice before they do it. This is a way that an awful lot of childcare businesses fail. Cash flow management doesn't take into account accounts receivable or accounts payable. No long-term debt service. So if the business has a mortgage or a loan that they have to make monthly payments on, that may not show up in the cash flow analysis either. There are also balance sheets, which are sometimes used again in tax preparation, but they are again very limited in scope because they look at a specific moment in time. As of 12:42 p.m. on March 15th, this is what the balance was. It does take into account past due to you accounts receivable as well as accounts payable, but again makes no prediction about what is going to happen in the future. Therefore, using a budget and a profit and loss statement as brother and sister are very helpful. Using the balance sheet or the cash flow statements can be useful tools, but you need to be aware of their limitations. I want to talk to you a little bit about why budgeting is important. This is an incredibly stressful part of the homework for a lot of our directors, but it is so vitally important. I've been an owner who hired directors. And I've been a director who was hired by an owner, as well as one who was brought in by a nonprofit board. So in some of those situations, I had no control over the budget at all. And in other cases, I had all the control and I had directors who simply had to implement it. You need to understand it in either case. It is so... I don't know how else to explain it. The budget is policy and the policy is budget. And I've known directors who got fired because they knew that they got hired to increase enrollment, but they also increased staffing, which threw the budget all out of whack. And they didn't think about the impact of one on the other. And they didn't have open communication with their employing entity, whether that was a board or whether it was an individual owner. You need to do the numbers. You need to have a good understanding of how much money it saves your program to send staff home an hour early because you're low in enrollment today. What it can do for the staff morale as well. If the same person gets sent home every time you have low numbers, then that's really demoralizing for some staff. Other staff think this is amazing and they have got it made because their days are frequently short. Some people love to go home early, other people hate it. But if it's balanced within the program that different people go home different times, it works better for your program. But what does sending that, we'll take a $10 an hour person home 1 hour a week do to your budget? Take a moment, do the math. 10 times, how many weeks are there in a year? 52. Okay, that's $520, not counting the 10% approximately of taxes. If you also offer them benefits, that can add up even more. $520 doesn't sound like a huge amount, but is that one kid's enrollment for a month? So 1 hour a week for one employee is the same as one child's enrollment for an entire month. So if you can do that just by saying, you know, take an extra 15 minutes, or why don't you go ahead and go home at 4 o'clock, or why don't you take a 2-hour lunch, means that when you have a child who disenrolls and it would otherwise mess up your enrollment, your budget, you don't have to sweat the small stuff. It also means, how many reams of construction paper can you buy for $500? Playground balls? Sand buckets? What can that $500 mean to your program? If you feel like you're always having to be stingy with the art supplies or with the replacement pieces of equipment or supplies, how much more free can you be if you can send people home, or if you can give them 15 minutes extra at lunch? I want you to be able to hire substitutes so that you as the director don't always have to go into a classroom when there's a problem. You can do that if you mind your pennies. Remember, you can invest, save, or waste money. Invest your money in your program. Spend it on marketing, especially marketing to your existing clientele. It's cheap to market to your existing clientele because they're already there. They already think you're pretty good. So spend some of that time investing, some of that money investing in those existing clientele. How much money does it cost to get one new client? How much of your time? How much paperwork versus how much money does it cost to keep a client? All of these things are related. Your budget is your policy. Your policy is your budget. It is incredibly time-consuming and demoralizing to your staff and to the other clients when a sick child is allowed to stay at your program for 6 hours and then gets everybody else sick? How many times is that going to happen before you have parents who start withdrawing their children because their kids are getting sick too much at daycare? It's a budget issue as well as a policy issue. All these things are related to one another. I want you to really think about what do your decisions, what effect do they have on the dollars and cents of your program? Does it make sense to continue to operate a room that has just enough kids to break even? Or would it make more sense to adjust the age ranges in your different classrooms and move some kids up in 2 different rooms so that each of the rooms can better support financially the teachers that you want to have? Or is it more important to the quality demonstrations in your program to have that maybe 4 or 5-year-old class supporting the toddler class, even though it doesn't have enough children? Another big budget issue is, did you hire the right staff person? You can hire people who are 18 and have their high school diploma and GED and no other qualifications and train them to be the type of teacher that you want. They're less expensive to get initially, but you're going to have to spend more time and money to get them to that standard that you want. But you know that they're who you want. Or you can hire the more expensive teacher who already has the qualifications and who just needs to learn your system. These are budget decisions. Sometimes you feel like you don't have any choice in your hiring decision because you can only afford to pay somebody, whatever it is, $8 an hour. But can you afford the time and the training it's going to take to get them to a point where your clients are going to be happy with them? And if you hire that $8 an hour person, are you going to lose any of your current clientele? Sometimes hiring the cheap staff person is a bad budget decision because that room has had so much turnover that your clients aren't going to have the patience to wait for this staff person to become who they will become. Other times, hiring that person who has their master's degree in early childhood education is a bad budget decision because really, they don't match your program. Their quality demonstrations are not the same as your programs. There is not a hard and fast rule as to what you have to hire. But all hiring decisions are budget decisions and you need to think about it. Hiring that person with a master's degree may bring more people into your program. It may become part of your marketing budget. Think about what the hiring decisions do to your budget. What does it do to increase customer satisfaction and what does it do to decrease customer satisfaction? These are all budget decisions. What kinds of art supplies do you have in your program? Do you have a lot of glitter and googly eyes because that's what your parents want? Or is everything blank paper or reused paper and construction paper? It's a lot cheaper to buy liquid glue than to buy glue sticks. But do your staff know how to use it effectively? Glue sticks dry up really quickly if people don't put the lids on them correctly. So is it more efficient to buy those glue sticks where your staff can just put them on the table and the kids can use them and they don't have to worry about it and the mess associated with liquid glue? Or is it more cost effective to teach them how to use the liquid glue in a developmentally appropriate way for the children in their class? Eating a little glue isn't going to kill anybody. Eating a lot of glue could be. So are they supervising properly? Okay, all of these things, everything, what playground equipment you put in is a budget decision. Are you buying one that costs $10,000, but you're not going to have the money in 6 months to do the appropriate maintenance so that that is a worthwhile investment? It's not just the buying of things, it's also the maintaining of things that are budgetary considerations. We've got some footage that I'm going to show you right now. Initially, we had thought we would put it in the playground safety section, but I've decided it works better here. This is an amazing playground that cost over $10,000 to install when it was installed. It's designed by an amazing custom designer of playgrounds. It has all kinds of different play spaces and play surfaces, has an old car that the kids get to do dramatic play in. And when it was put in, it was amazing. However, the program that installed it left, and so it was left at a church that didn't do the maintenance. And now, instead of being an asset to the program, it has made it such that the program that's there probably will have to leave because it's not being maintained by the church and the program has not been given the authority to do the maintenance. As you can see, there's a swing set, which is wonderful, but swing sets take up an awful lot of your square footage, so sometimes it's not a good budget decision. And underneath those swings, you can see, I think, that an awful lot of the sand has been eroded. They chose sand as their fall surface, which is a very cost-effective fall surface, but it does have to be refreshed. So this underneath the swings, you now don't have enough fall surface to ensure the safety of the children swinging. That's a problem. It's a huge budget issue because if a child falls and breaks their arm, who's going to be paying for that? Okay? You can also see where the wood has not been stained every 6 months as it's supposed to be, treated to keep the water out of the wood, and so the wood is splitting. And in some cases, even splitting to the point where the fasteners, which are screws and nails, are exposed inside. All it takes is some basic maintenance and you can have an amazing playground that stays amazing for years and years and years. Or you can take the cheap way that this church did and have a playground that is, instead of being an asset, is a detriment to their program. Okay, so these are just a couple things to think about when you're looking at budget and why it's important. Did you put maintenance in your budget? Did you put new fall surface? Because you're going to need to replace it unless you got unitary surfacing or shredded tires. At least once in a year, you're going to need to do some refreshing of your fall surface. Do you have money in there for upgrading your playground equipment or the general maintenance? Are you really hiring staff that make the most sense? What about your consumable supplies? I didn't even talk about one of the things that came up at one of my programs, which was, do we use paper towels or cloth towels? That's a budget issue. Because you don't have to use paper towels out the wazoo. You can wash things if you have if you have a washer and dryer at your program. And that can end up saving you huge amounts of money over the long run. But it's a lot more expensive up front. What about your glasses and plates? Are you using disposables or are you using washable? These are all budget concerns. Some things cost more up front, but less in the long run. And some things you just can't afford that upfront cost, so you have to keep going with the disposable. Or that lower paid staff. Okay, so these are some of your budget concerns. As you're doing your budget homework, just stop and think, how do I affect the budget if you're in a program where you feel like you don't have any budgetary control? You do. Take that power and use it for good.